one who had money, and we bought a mixed use building in Red Hook, Brooklyn, which was also unknown at the time. And we flipped it. And the buyer of that property was Shark Tank's Barbara Corcoran. And
Nice.
so
real estate mogul from New York.
And so at that point I was like, you know what? Maybe I've got a knack for real estate. Like if you
All right. Alan Corey, OG investor from Atlanta. You've been in it for a long time, man. 22 years. We don't meet very many people that have been in real estate for that long. I feel like everybody, they kind of got the bug after 2008. They waited 10 years and felt like they missed their opportunity and jumped in 2018. And that's like the core of every real estate investor, but you're really superseding that.
Oh, that's half my life, 22 years, which is crazy to say. And every time I post something on Twitter about investing in real estate, everyone's like, what about the 2008, 2009 crash? Well, you'll learn. And I was like, yeah, I had 7 years experience by then. Yeah. I went through that. Yeah.
Been there.
Yeah. No, I love that, man. And I always have so much respect for people who got through those things too, because I feel like so many people, like if they were doing it beforehand, that was kind of like the nail in the coffin where they were done. So awesome. So people who don't know who you are, maybe give us a little bit of background. I know you have a ton of stuff going on in the real estate space. I guess talk about sort of where you came from and all the stuff that you're working on now, because you have a podcast, you have, content that you do, you've been investing for a long time. There's a ton of stuff that you can go
Sure.
into.
I've got 23 years of stuff to get you up to speed on. So I'll get started. I started at age 21. I was living in the Spanish Harlem projects in New York City. And I was like, I just want to get out of here. I want to change my life. Everyone in New York just felt so wealthy. And so I had a $50,000 tech support job during the day, and then I was doing stand-up comedy at night. And so my path to riches was going to be being an entertainer, be a stand-up comedian. And when you're a new stand-up comedian, it doesn't pay very well. You can't pay your landlord in laughs, and especially if you're not a good comedian, that doesn't help either. Yeah. But that was my delusional mind in my early 20s. So I lived off ramen noodles for an entire year to save $10,000. And put that down on a $99,000 condo, 1-bedroom condo. And I told myself, man, if I just do this and buy one property a year for 5 straight years, I'll replace my day job income and I can go all in on comedy, because I wasn't getting any sleep, just working constantly. So I bought that 99 one-bedroom condo. I actually turned it into a 2-bedroom and started house hacking before, Brandon Turner named it house hacking. And but it changed my life. I was able to save money for a duplex the following year, house hack that duplex. And this was in Brooklyn. And I'll tell you, at the time, no one wanted to live in Brooklyn. And people would come up to me in the streets and say, hey, like, why are you living here? Are you a cop? And I didn't know what the answer, what's the correct answer to that? Like, do you want me to be a cop or do you not want me to be a cop? Like,
what's better for me?
Yeah, right. Yeah, exactly. And so I'd be like, I don't know, like, which probably makes me feel like a cop, but but now, obviously it paid off, but fast forward a few years. Anyway, I just kept on that path doing one after another. And actually I had a big win on my third property. I partnered with 2 people because I didn't have any money at that point after buying my second property, house hacking. I partnered with 2 people, one who was a contractor, one who had money. And we bought a mixed use building in Red Hook, Brooklyn, which was also unknown at the time. And we flipped it. And the buyer of that property was Shark Tank's Barbara Corcoran. And
nice.
So
real estate mogul from New York.
And so at that point I was like, you know what? Maybe I've got a knack for real estate. Like if she's buying my properties and I got in quicker and renovated it and I made some good money on that. Then I was like, screw comedy. Like I'm going all in. I'm keeping my day job so I can get more mortgages. And I just spent my nights and weekends doing real estate deals. And, at this point I've done probably 400, 500 deals. And, I've got 350 door portfolio. And I love it. I've done every aspect of it and wrote a few books about it. Now I tweet about it every day. And just like you guys, got a podcast where I'm talking about it. So it's a passion. It literally is a passion, and I don't feel like I'm working,
That's awesome. The question I have is, do you still own the duplex in Brooklyn? Because I got to imagine if you do, it's worth a hell of a lot more when you bought it.
I don't, but I bought it for $450. During the crash, right before the crash of the 2008, I got a HELOC line because it went crazy up in value for no reason. Pulled out $450, renovated it. So I had $1 million basis in it, and then lived in it for like 5 years, and then I sold it for $2 million. So after so it was yeah. So I got $1 million payday on that one.
That's sweet,
and it also helped. People are like, you got lucky, the Brooklyn Nets came to town. Brooklyn became a real city, cool hipsters, turning their businesses there. I bought it for the cash flow, and that's happened to me 3 times. I got $1 million payout on a property that just skyrocketed appreciation, but I never planned on any of that. I just buy for a couple $100 a month, and you do this long enough, you wait long enough, you're going to get lucky.
Right. Yeah. You got to play to win, right?
Yeah.
You got to be there for those big wins.
Yeah. Yeah.
And I love what you just said there too. That's one of my biggest pet peeves recently, especially as stuff started to turn over, and like the must be nice crowd and like the you got lucky crowd is starting to get a little bit more vocal because they all realize that they missed out on 2001, 2021. And you're completely right though. You have to take action. Like you got into this position in like the most, I guess, like simple way, doing this house hack, and lo and behold, over like, what was that timeline until you sold? Like 15 years?
Like almost? No, it was
12 years.
Yeah, maybe like 12 years. Yeah,
12 years. So like you held on this property for 12 years, you house hacked it, just held it to long term, and you made $1 million. Like the game of real estate is to take action and then wait long enough for that to happen.
Yeah,
for it to pay off.
And I was house hacking, so I could take that money to go buy more real estate. Like I'm just constantly buying real estate. So it's more than just $1 million, and that's not and it was a HELOC that paid for it. So it wasn't like I had to save up to renovate it. Like, so it's just that, and then that house, once I also used that HELOC as a down payment on another duplex on my same block. And so I basically got 100% financing. And so I bought another, and that also doubled in value. And so basically 100% financing, because my down payment was a HELOC as well. Once I renovated, I could get a bigger HELOC. And I just, I'm anti Dave Ramsey. You'll find out. It's like
you love
that. Yeah. Let's put it to work, and it's treated me well.
Awesome, that's good stuff. So you jumped forward there really quickly. So you have 350 units now. What does that consist of? Is that all like residential stuff, like that condo, or did you scale up to multifamilies? Like, how did you sort of like build that? What was your whole scaling method? I want to hear all the details in between.
Yeah. So after I acquired 5 properties by 26, I was like, to scale up, I'm going to start 1031ing everything I sell. I want to buy a bigger unit kind of thing. So I would sell the condo and turn it into a duplex. I'd sell a duplex, turn it into a mixed use, which is a duplex with a store, and then I'd sell that, turn it into a triplex, and then I'd sell my triplex, if the timing is right, and so I kept going bigger and bigger. I did kind of get pulled back in single family 3 or 4 years ago, but I bought a 50 unit, a 50 single family home portfolio. Wow. It was seller financing, and the numbers were just so good. But I just recently sold that 2.5 years later, and that was my $3 million win right there. So, but again, I bought it for cash flow. Like I was like, I bought these things roughly $40,000 each, and they were $600 a pop in rental income. And I was like, yeah, this is just mailbox money, great. And then investor came along and wanted the whole portfolio from me, and he had 1031 money, and it didn't make sense not to say yes. And so anyway, long story short, I only invest in multifamily now, typically apartment buildings in the Atlanta area. I relocated to Atlanta, and I'm sort of looking at things 20 units or above.
Nice. So when
Very cool.
you're taking those properties down, are you like syndicating these deals? Are you? I mean, you have had a couple $1 million paydays. You just buying them yourself and
Yeah.
just moving it from there.
So my current portfolio, I've got 18 doors. That's just my wife and I personally. That's all duplexes, triplexes, and quads. And then the remaining 320 doors or whatever, it's me and two partners. And typically we've done private money to raise and some private combination of private money and hard money. And got some LP investors as well thrown in there depending on the deal. But that's sort of how we're pulling it off.
Nice.
Gotcha. Wow, that's pretty incredible. It's interesting to do that, especially with the private money, or the private partners and the private money. So you basically can own a larger share of that, is what you're saying.
Yeah.
You're not doing the typical syndication. It sounds like you have some syndications, but you're not like going and raising and giving away 70% of the deal to your LPs.
No, we are. So my two partners and I, we raise the GP side, typically, a portion of the down payment and the renovation costs. We'll buy value add apartment buildings, but
Gotcha.
Depending on the amount of if we raise the money, great. Sometimes we'll raise the entire money. We don't have to bring anything, and then sometimes the investors aren't ready to invest, and we put our own money into it. So it really is a case by case. But I tell everyone this: if you do something for 22 years, people start coming and asking if they can give you money to invest in real estate. So just stay in the game, and it almost gets easier and easier. But you also get better at it, and so you just. 22-year-old me.
It's like LeBron James.
Yeah. 22-year-old me in projects buying a one bedroom. That was the craziest thing that I thought I'd ever pull off in my life. And now I'm like, wow, I can't believe that this path that it's taken me on.
Yeah. I'd love to touch on that really quick, where you're talking about you do this long enough, people start to come to you with, wanting to invest money in real estate. How do you have those conversations? Because I get that somewhat regularly. I know Dan does a little bit as well. But the problem is it's usually uneducated people who have like an unrealistic view about what that deal should look like.
On the
and they're
return.
like, they're like, here, I'll give you some money and we can split a deal 50-50. I'm like, I'm not going to do all the work for you to get 50% of the deal.
Yeah.
That
I don't need your money that
sense.
bad.
Yeah.
I mean, I think it's one of those things where I guess it's first started with everyone was asking me to be their realtor. And I was like, I don't want to be a real estate agent. Every real estate agent I've met is an idiot when it comes to real estate investing. And they just kept begging me. And then I was like, fine, I'll get my realtor. And then I love being a realtor. And, I've been a realtor for 8 years now. And now I'm like, oh, real estate agents aren't idiots. I just didn't understand the other side of the transaction. And then people, so was like, hey, will you be my realtor to help me real estate invest? And so then I started helping real estate invest, and I'd help grow them. And then, just talking real estate with people. How's your deal going? What are you working on? Oh, I'm working on this. And they're like, oh, I want to do that, something bigger and better or whatever. And I'll be like, well, we're looking for $200,000 duplexes right now in Georgia, and you've got $50,000. Honestly, I'm not begging you. I don't need your money, but if you put $50,000 in my deal, I think you're going to make more. I definitely know you're going to make more, but worst case scenario, you're going to make the same, and you're not going to have to do any work. And you obviously trust me. I've been your mentor. Let me just go. Just let me do my thing, and we'll share the income. And then what usually happens is that first deal, the first time they do it, it works out really well, and they're like, "This money's earmarked for real estate, Alan. Like, thanks for the cash out refi, but can I put it back into your next deal?" And then you just reinvesting the same investor's money because you keep returning their money, and they're like, "No, this is my retirement fund. Let's do it again. Let's do it again." Like, they're not expecting that income to live off of or affect their lifestyle. So I think it's just earning their trust over time, and then people have an idea. I think how small or residential deals go, single families, maybe up to a quad. But commercial, and I learned this, I've only been doing the commercial side for like 4 years. Like it's a different language. It's a different way to look at deals, and it's a different way to structure the deals get done. So I find either the people who want to invest with me, they know more about how these deals are run because they've been investing in private equity deals for a long time, or they know nothing and I'm educating them. So they don't come in with a sort of 50-50 expectation because, that $50,000 isn't like I have put in 50 and you put in 50. It's okay. You're one of 10 people putting in 50 and so it's a different conversation. I think expectations are, get aligned much easier.
A little different. That's a great perspective, though. Going back to your point of like having people coming in, yeah, I've got 50,000, because Mike is right. Like people, they're like, I want to invest in real estate. Can you show me how to do it? I'm going to buy a duplex this year, and it's like, well, like you need to educate those folks on what a realistic return is, because although we all have stories, once you've played the game long enough of like big wins, you've got your $1 million payouts that you weren't banking on. I'm investing for cash flow. Mike and I have had big wins on our ends as well for things that we didn't expect. And they see those and they're like, well, that's what real estate is. It's like, no. You're trying to invest like a little bit, like this is what we do full time. So your little bit, your return on investment is probably not going to be anywhere near ours, but we can give you that if you just give us your money and you don't actually have to work for it, because there are a lot of unrealistic expectations that every deal is a home run, and it's just not the case. And so I always try to tell people this, like the actual cost of owning a property is way higher than you think if you don't know how to own a property. Well,
I set those expectations that like, listen, this is not a get rich game. This is get rich slowly, get rich eventually. Like you will get rich, right? Right. Like, and so I'm like, the HGTV shows, those are flippers and it's all, for show. But, the way I educate is okay. Look at the bills in your life. And let's say you have a, $150, phone and internet bill, $150. I was looking to retire. I retired the first time at age 28. When I thought I was a hot shot back then, because I had 5 properties. But but the way I approach it was, okay, I have a $150 internet bill. I cannot escape that for the rest of my life. I can't go to Costco or Sam's Club and buy internet access in bulk. I can't, if anything, that phone bill is going to get higher and higher each month. But there's a bunch of, I don't know if anyone's familiar with the FIRE movement, Financial Independence, Retire Early. Their whole thing is, this is how much money you have to save in stocks, which is take that $150 and what is that a year? That's $1,800 a year. If you save up 25 times that amount in a stock portfolio, and then you withdraw 4% each year, you'll always have enough to cover that $150 bill. So that's a $45,000 investment. And that's crazy to me that I have to save up $45,000, put it in stocks that I don't have control of. And hopefully my phone bill doesn't go up, but that's, I have to be a millionaire basically to retire. So I was like, that is not the real estate way. Cut that in half. If I save $22,500, right, half of that $45,000, I can go buy a $100,000 single family house, $100,000 duplex that cash flows $150. And that $150 is going to go to my internet bill, right? So this is my house fire method. This is the book I just published, and it's taking every bill and assigning it to, or every house and assigning it. So when someone comes to me and they're like, "Hey, I'm going to get rich off this," it's like, no. Let's. What bill do you hate the most in your life? Let's start with the bills you'll never get rid of, like that bill. And some people come to me and they're like, "Well, I'm going to pay $50,000 off my student loans, and then I'm going to start investing in real estate in like 5 years." I was like, no, but take that $50,000, go buy a house, and that house is going to pay your student loan bill. And then, then you have that asset instead of giving. I did the same thing for my Tesla. Instead of taking $50,000 and saying, "Here, Elon Musk, you're the richest person in the world. Now you get $50,000 of my own money." I didn't want to do that. I went to go buy a house with my $50,000. That cash flows enough to cover my Tesla car note. And then, so in 7 years, that car note's paid off. The student debt's paid off. My internet's always, and I've acquired 3 homes. All those bills are paid off. The house fire, burning up those bills. And, typically 5, 6, 7 homes, and you just do it at 25, 30 chunks a year. You can have all your bills covered. And, now I'm buying houses and making up bills. Like, I want to go live in Hawaii for 3 months. What kind of house do I need? What kind of cash flow do I need to pay for that?
Yeah, right.
I love that point of view too, because it's like you said it. You're like, here, Elon Musk, here's my $50,000, which that $50,000 is an asset to you, and you're just giving it away. Why not keep that asset, which you totally can in real estate? Keep that 50,000, buy an asset, and now that asset's paying for whatever the hell you want it to pay for. It's just kind of like this idea. I think about anytime you can make an investment and own an asset, that's way more valuable than buying something that's not, that's just a waste of money. That a Tesla is kind of a waste of money. You need it to get around, but you can pay for it with your damn house.
Yeah.
It's so awesome. It's just a unique perspective.
And
So it's a longevity thing. So, in like most people's car notes, 7 years, right? So in 7 years, when that car note's paid off, I still have a house that's generating cash flow. And that's like, okay, I got to earmark this extra cash flow to another bill now, right? And over time, the mortgage gets paid down, the rent goes up. So once you sort of cover all your bills, you actually live richer and more abundant each year in your retirement because you're making more cash flow as these homes appreciate and the rent goes up and expenses go down. And so it's a baby step approach, but that's why I say, get not just rich eventually, but get loaded eventually.
So cool.
Yeah.
Right.
Yeah. Well, and then the crazy thing is too, wealth and, being rich, whatever aside, that is the true fast track to like the financial independence sort of concept, is using that leverage and approaching it that way. And that, like, back when I was a corporate engineer, I worked at Boeing for a number of years. And I hated it, man. Like, I hated being an engineer so much. And I wanted to, be financially free, right? So I got into like these Reddit threads, Mr. Money Mustache, like doing all the original like fire content. And some of the things these people would do, they'd be like, I now have my entire family and we only eat, like bulk rice and beans and we just moved into a tiny home that is in the hood of like Memphis and like and I'm just like, so that we can, and with this projection, with my savings rate, we're going to be financially free in 17 and a half years. Like,
right. and honestly, in a method that I don't buy in, like you use the 4% rule, Alan, which is a very widely used for retirees, which I don't know that that's even valid, honestly. No. But I do know owning assets that sit on your balance sheet, on the asset side of your balance sheet, is a sure way to become wealthy.
Yeah,
it is. And one of the problems with that, the stock market like 4.5% method too, is it does not adequately account for inflation. So a lot of them will be like, oh yeah, you just save $1 million, you can pull 4%, you can live off of $40,000 a year.
What about 9% inflation?
Yeah, right. We have 9% inflation. Sure, the stocks go up today. Like last year, the stocks tanked 30%. Like that screws up your whole thing.
Well, your 4% is a lot less now. 4% on something that's worth 30% less, where your cash flow never really goes down on a real estate asset.
Yeah, exactly. Your cash flow stays somewhat consistent unless there's rental adjustments, but then also, the debt pays down, increases your total IRR. The property appreciates over a long period of time. You have tax benefits. Sure, you have to use debt, which is quote unquote risky if you're irresponsible with it. But I mean, it's so fascinating to me that despite all of the like numerical evidence about how much better real estate is, people still fixate on like the FIRE movement from the antiquated method of like the 4% stock.
Yeah. I mean, not to totally like pick on the FIRE movement too much, because I did lean FIRE when I retired at 28, but I'm over that now, and I'm not the super frugal guy. But when they do, when you have that frugal mindset and you decide and think that real estate's for you, they end up being all cash buyers. And I always walk them down the math on that, and not to be an all cash buyer, back to my anti-Dave Ramsey sort of line of thinking. And, the way I sort of explain that to folks is, let's say you have $100,000, house, you get $1,000 in rent in for it, right? That's great. You're investing in real estate because you think rent's going to go up. Let's assume that, the property increases 10% and maybe rents go up, $50 a year for a couple of years. So you've turned that, 5 years, forward, maybe you're renting that out for $1,300 and it's 10% more. It's $110,000. Great. You turned $100,000 into $110,000 in 5 years. If there is vacancy, then obviously you're not making anything. And I said, well, let's take the other approach. Let's assume that we want to do a mutual fund of houses where we have 5 houses. We take that $100,000, put $20,000 each on 5 different homes, and the exact same thing happens. We buy them each for $100,000 with a 20% down payment. They each rent for $1,000. They each go up $50 each month, right? Well, fast forward 5 years, if real estate went up 10%. Well, instead of having 110,000, you now have 150,000 because you have 5 homes that went up 10%, right? Mm-hmm. If you've raised the rent 250 per place, instead of making an extra 250, you're making an extra 1,000 a month because it's all covered. And if you have 1 vacancy, 2 vacancies, right? Those 3 other ones, like let's say you don't rent something for an entire year, those 3 other ones will carry you because you got a mutual fund approach, and you'll make just as much money as if you only had 1. So you're building a safety net with debt. So debt is not scary and not risky. You want as much debt, as much leverage as possible, so that you can kind of get amplify your returns and spread it out. And then you're going to get those, I call it imaginary lottery tickets. Like those 3 things like that I bought was because I was 100%, leveraged as much as I possibly can. I bought it for the cash flow. Then I get lucky. And the more houses I buy, the luckier I get. If I buy 1 house, I may get lucky. But if you've got a 50 home portfolio, you're going to get lucky 3 times kind of thing.
Mm-hmm. Absolutely. Yeah.
That's
why Mike buys scratch tickets every single day, because he knows if he buys more. No, but that is so true, though. I believe, and Mike and I preach this to a lot of folks, is like there is reduced risk with scale. Yeah, because you have things that, so more to your point, more debt, more leverage is actually in your benefit as you continue to invest.
Yeah, and that's we always sort of coach people, I guess, that if you're going to get into real estate, don't just buy like 1 single family and expect that to, be the be all the end all for you, because you have an issue that happens. You have to replace the furnace. That's now a huge liability on your personal expenses, unless the thing's just a cash cow, which is probably not if it's a single property. But if you have like 10 properties, the furnace goes out, kind of like you said there, Alan, everything will pay for itself. You have a vacancy. And I remember being in that boat when I first got started, and I had some of these properties, and I'd be like, oh my God, there was like, I have to get a new dishwasher. That's like $300. Like, that's horrible.
2 months worth of cash flow.
Yeah. But now that we have, 50 units, it's like, oh, I got to get a new dishwasher. I think we got some extra ones that we bought like when they were 2 for $1 at Lowe's.
Somewhere. Where are they?
Yeah. Where are they? Yeah. They're in the garage at the other unit,
No, yeah, totally. But Dan, you just said something that I think a lot of people think. It's like when you have a $300 repair, I don't think, hey, this is coming out of my cash flow. Like that's 2 months of cash flow, because I've already budgeted for those repairs. My cash flow is after my repair budget, right? So I think that a lot of people, are like, well, what happens if, in that scenario, especially with my house fire method? And it's like, no, we've budgeted for that. That $150 that's paying for your internet bill or phone bill, that's after your expected repairs and maintenance and vacancies. You got to kind of trick your brain and saying this is not taking it out of your cash flow pocket at all.
That's like this. That's a very small nuance that I think a lot of new investors overlook, that they don't understand. When you're saying I make $150 a month on that rental property, people are like, "Ooh, God, that's not a lot." It's like, no. That is after I've paid every single thing, and that 150 is secured monthly into my bank account unless a tornado takes the house out. And guess what? I have insurance, so we're good.
Yeah, that too. Yeah.
Yeah, I mean, you're going to have the insurance come out and be like, well, you did ask for it by buying the house in like the tornado lane, so we're not going to give you the money for it.
Sorry. Yeah, right. Got to call FEMA.
Right. Awesome. So that's all good stuff, Alan. So I guess, you've been doing this for a while. You've had some big paydays. You've been buying these multifamilies. I guess what's kind of next for you? Like, you keep doing real estate, you're doing this content. What is your current goals for your business going forward? What sort of stuff are you working on here going into 2023? Yeah,
I'm more of a real estate coach now. So I'm offering classes, and I'm launching my second podcast. I've got one that's just me interviewing great real estate investors. Mike, you were recently on my show, Real Estate Maximalist, but we're launching right now a second podcast. This is a spinoff of a personal finance show that I love called Stacking Benjamins. And I was a guest on their show a couple of years ago, and I was like, man, you need to do a real estate spinoff because this would be great. And if you do it, I'd love to be the host. And so, 2 years in the works, we're finally making that happen. So Stacking Deeds is the spinoff that's available now. And that's more of a fun, educational show, very, very new real estate. Like we don't do any deep dives, but it's just sort of introducing real estate to folks. Something I can put on with my family in the car, or something that'd be like, oh, it's light, it's airy and entertaining, and maybe my kids will learn something about real estate, and it's not me shoving it down their throat, kind of concept. So I do that, and I've recently fallen in love with Twitter. So I'm Real Estate Maxi. My podcast, Real Estate Maximalist, but my Twitter handle is Real Estate Maxi. I tweet every single day, and I've sort of become addicted to Twitter. So I guess they call that digital real estate. So I guess that's going to be my new portfolio. Yeah.
Nice. I love it. So yeah, just going on and starting to create that content. And it's always funny. People, there's always like this weird sort of thing when there's people that start doing this content and, coaching, that sort of stuff. And we've started to receive this a little bit, Dan. I don't know if we've started to get our first round of haters as our podcast has started to gain some significant traction, and we've started to have more success for people in our course. But people always reach out and they're like, well, if it works so good, why are you teaching other people? Why are you creating all this content? Why don't you go and you do more, more real estate stuff? It's like, A, because this is way more fun, if I'm being completely honest. And B, because it's something that's so simple, like anyone can do it. And once you've kind of figured out, it's hard not to get excited, to want to get other people excited.
I know I should stop talking about Dave Ramsey, but talking about haters and trolls, everyone's like, oh, Alan, you're an idiot because look how much money Dave Ramsey has and look how much money you have. And I was like, no, he made his money off a media empire talking about how he went bankrupt in real estate. So it's like the money, real money's in media, and so, that's where he makes his money. So, and I don't think it's a scorecard, really, how wealthy you are. It depends how good you are. I've gotten lucky 3 times. I promise you there's way better real estate investors who haven't, received that luck, right? And there's worse ones that got luckier than me. But it's you got to play the game to get lucky. But even if you have no luck, you'll be successful over time. So, I think it's. I was getting that. My first book was called $1 Million by 30, and everyone's like, "Oh, you got lucky because it was before the run up in prices in 2005, 2006," and I was like. Yeah, it was really lucky that I ate ramen noodles for years and house hacked and bought in places where, people nicknamed it Murder Avenue instead of Myrtle Avenue. Like I got so lucky, just silver spoon in my mouth. So, you just, it is what it is.
Yeah, nobody sees the sacrifice.
Yeah. You become overnight success. It takes 10 years to become an overnight success.
10 years. Yep.
Well, and the crazy thing is too with real estate, especially if you buy at a discount, like a millionaire status comes incredibly quickly. Even with Dan and I, when we started working together, I crossed millionaire status. I was hoping to hit it by 30. It was shortly after my 30th birthday, but it was it happened in like a couple of years. Like it didn't take very long. And even then people have said, you guys were at the right timing and all that sort of stuff, as we did. But what they don't see is when we first started, it was me and Dan walking through these like hoarder houses, these heroin houses, talking to these like weird ass people like on Saturday afternoons, trying to get these deals signed around. The stuff that nobody wants to do. But we were buying houses at 50 cents on the dollar.
Oh, totally.
And when it's a $400,000 house, you buy it for $200,000. Net worth comes incredibly fast. It's just math.
Yeah,
That's all it is. It's mathematics.
Yeah, and you got to put in the legwork. You got to put in the effort. You got to crawl through murder basements like we've done and all sorts of gross things. And, it's not overnight, but then people see all the success and they're like, oh, yeah, it must be nice.
Yeah. Everyone wants the fast pass ticket to real estate success, but it doesn't exist. And,
it doesn't. Yeah. It doesn't exist legally or without getting like real weird.
Yeah, exactly. Getting real weird.
But it's the same thing. It's like, it's why do you expect that in real estate? But people don't have that expectation in the stock market. People used to have that expectation in crypto, but like, that didn't work out. Like why does real estate have that expectation that it's going to be skyrocket to success? Most people throw money in their 401k IRA and they're fine with a 30-year wait. And I'm like, just take that mindset and apply it to real estate.
It's because we have the flip or flop people, you
Yeah.
know, and the Chip and
Yeah.
Joanna Gaines. It's very, you know, like present, right?
You can flip a house in a 30-minute episode, and yeah.
Yeah. Oh, did we just lose him? Oh, you're back. Sorry, Max, cut that out. Quick technical glitch. But yeah, so we have like the flip or flop people. We have the Chip and Joanna Gaines. We don't have like, this is Wayne. He's a day trader sitting, you know, in his mom's office,
right.
trading, you know, penny stocks.
Yeah.
Like no one wants to watch that. He's like wearing a
the
diaper.
Before and after photos aren't as good. Yeah. Here's my Robinhood account before. Here it is after. It's much different than a house before and after.
Yeah, you know, and you're starting to see that a little bit with some of the crypto bros that are out there. And so that's why people have the get rich quick scheme mentality with crypto. But, you know, at the same time, it's, I don't know, it's just different, right? It's like it's gambling versus stuff that you can actually structure and give you that guaranteed wealth over the long term. Awesome. So good stuff, Alan. So we're going to go into the end of the show here. We always have the same questions that we ask every guest that comes on the show. I probably should start sending these people ahead of time, but I don't know. I always kind of like the off the cuff answers too. So the first question, which is the group favorite, what is your craziest real estate investing story? And the number one rule is you're not allowed to talk about finding a dead person in a property, because that's a,
unless
a common
it's really
answer.
unique, because we haven't had one of those in a while. So I mean, we could, we could sport one.
Well, so the problem is we say we haven't had one of those in a while, but the way the recordings come out, it might be like 7 in a row, and I was like, oh man.
Yeah, we did live on Murder Alley, so I'm just
Yeah, that's true.
Yeah. That I would say interesting is like when you're at a certain start getting to a certain price point. These aren't bad stories. These are good stories. But
good stories are good too.
Yeah,
good stories.
Like I mean, I sold a property, Barbara Corcoran, right? And then that other duplex that I sold was sold to Christina Ricci. She played Wednesday in the Addams Family movie. So this was on Myrtle Avenue, right? Myrtle Avenue. When I bought there, it was bulletproof bodegas and liquor stores, right? And then when I sold, it was Chipotle's and Starbucks, right? So so to me, my crazy stories was like, damn, how did this happen? And why are celebrities like? I'm at a closing with the celebrities, like that. To me, I think I pushed down the bad memories so far down that I can't even recall them, because I'm living in the highs all the time to kind of keep me going. But my bad stuff, a couple break-ins here and there, definitely bought some hoarder houses, but to me, the fun ones are just like adding back to the neighborhood, like this, turning coal into a diamond, and wow, a celebrity wants to buy this. There's always been sort of my career highlights. Yeah,
I love it. The real estate optimist. That's probably why. You shifted away from stand-up comedy, because those people only see the negative in things, but it sounds like you only see the positive.
Yeah. That's self-preservation, I guess, of just my ego and my spirit, and just to keep on moving. Because, like you said, you've been, crawling in crawl spaces and dealing with last minute lender issues and, appraisal snafus. Like that's so much stress every single day. If you do this long enough, and you're trying to pull off some very creative deals, but to me, it's also, I guess the other side is just changing lives. It's great when you change the life of the seller who has to sell, change the life of the buyer. And it's those wins kind of keep me going.
Yeah,
for sure.
Awesome. I love it. All right. Second question. What is the number one tip that you would have for either a new investor looking to get started or a small time investor looking to take their business to the next level?
Yeah. So no real estate investor I've ever met says, man, I wish I got started in real estate 2 years later. Like that. Everyone's so happy that they started when they are. Everyone. Like when I bought my first place, it was 7.5% interest rate. I was high-fiving anyone who would talk real estate with me, because I got the best interest rate ever, right? And that's 7% right now as we're recording this is like typical. So just start buying, and things will happen. Don't wait. And it doesn't. So that's, I guess, is more for the new timers, because the big time guys know this. But that would be my I guess advice for that. For the big timers, it would be go to multifamily as soon as possible if you can. Just when I sold my portfolio and turned it into an apartment building, it was, wow, I only have to drive to one location. I only have one roof to replace. I only have one landscaping bill now instead of 50. I only have one water main to worry about instead of 50, one water heater. Like all the all the expenses are just get scaled down so much. It's quite amazing. So people say, oh, I should start in multifamily, because when I give that advice, it's like, no, like, most people don't have the money or the experience or it's not in their town or whatever it is. I worked up to this over 20 years, so just start with a 1-bedroom condo and then flipped it up. But if you can start there, great. But that's everyone eventually, I think, needs that kick in the butt to kind of, hey, start doing apartment buildings. And it takes time, it takes confidence, it takes money, and you'll get there eventually. Everyone will.
Right. Awesome. True. Good stuff. All right. And last question. I know you touched on some of your platforms before, but let's go into them again here. Where can people find you, follow you, and reach out to you if you'd like them to do so?
Yeah, Real Estate Maxi is really my Twitter handle, but I've got a newsletter called the House Money Newsletter that I send every single week. So you go to realestatemexi.com and sign up for my newsletter, and I pretty much recap my week there. So my podcasts, my tweets, not just my own, but other people's stuff that I've liked, so that you get a weekly dose of real estate education and nice bite-sized pieces. So
nice.
Yeah, realestatemexi.com or find me on social media and sign up for my newsletter. Thank you.
I'm gonna go.
Cool.
I'm gonna go sign up for your newsletter so I can steal some of
signing
your
up for it
topics
right
for our
now.
show on a weekly basis.
I mean, it's just going to be pictures of you and your blown quote that says,
Right.
This is what Dan and Mike said this week. Yeah,
Yeah, there you go.
I can support that. Awesome. And then just one last thing. Did you have like what was the launch date for your new podcast? It's coming up here soon, isn't it?
Yes, Stacking Deeds is my new podcast launching March 7th. So check that out. That's the light and airy one. And then sort of more deep dive is Real Estate Maximalist podcast.
Awesome. So definitely check that out, everybody. So March 7th, that'll be just shortly before this episode comes out. So you'll probably be a couple episodes in when you hear this. So definitely go and check it out, guys. Alan is an incredible wealth of knowledge. Awesome, man. Well, thanks, Alan, for coming on the show. I really appreciate it.
Alan. This is great.
This was blessed. This was great. Let's do this again over beers or at a closing table sometime soon.
I love it.
Absolutely. I love it. So awesome. Well, thanks so much for listening, everybody. Hope you enjoyed this show with Alan. Please reach out to him and check out his content. He is a wealth of knowledge, and he's super happy to chat with people. So, check out his show, hit him up on Twitter. He, wants to hear what you have to say and think about real estate and all the stuff that he's doing. So go ahead and reach out to him at all of the places that he expressed. Aside from that, guys, please share this show with anyone who might find it interesting. The easiest way for us to grow this show is for you to tell all of your friends and family about it. Even if they don't care, they might know someone that does, and maybe they'll share it. And so it's kind of like a exponential growth. So just go and tell everyone about it. Yes. First person to get a Collecting Keys tattoo, I will literally write you $1,000 check and send it to you. And I am 100% serious about that. So if you do that, and you post that on your social media on your social media account, I will send you $1,000. I'm just going to keep going in the gutter with these random promos. All right, guys. But besides that, if you want to start getting off-market deals, go to collectingkeyspodcast.com/free. You can get our free 5-step guide, and that will give you everything you need to get started. Besides that, guys, thanks so much for listening, and we'll talk to y'all next week.
See you.